Welcome to the Premium Option YouTube channel where we talk about everything options trading and stocks in order to help you learn and make money off of these markets. Now today specifically, we're going to be talking about how to write or sell covered calls. Covered calls are an amazing way to make some extra income on the stocks that you already own. They're a little bit different than cash secured puts because you already own them. And if you don't know what that is, check out our latest video because we made a video on how to do cash secured puts. Now, if you're brand new to this channel, make sure you subscribe down below so you don't miss any new videos because we post videos daily. And on top of that, feel free to say hello in our brand new, completely free Discord where you can get access to just about anything involving the markets, options, and stocks, where we talk about market news, updates, trades we're taking, stuff like that. So if that's interesting to you, it's also completely free. Link in the description down below. Okay, so back to the video. Let's talk about what you actually need for a covered call before we actually talk about writing one. So the first thing you're going to need is 100 shares of a stock, which you could see over here. I have 100 shares of SNDL, which we'll actually get to in a little bit. The next thing you need is, if you're trading on Robinhood or Webull or TD Ameritrade, whatever it may be, you need to be authorized for options trading. Now, the way you can do this typically is you're going to go into your account settings and then you're going to apply for options trading. There's typically around 3 levels. The first one will always allow you to do covered calls. And then as you get more and more advanced, you can start doing debit and call spreads and a bunch of different things. So the next thing that you're going to want to do is you're going to want to be okay with selling these shares at a certain strike price. You need to be okay with letting go of these 100 shares at whatever price you pick. So once you have all those 3 things, let's actually jump into how to do it on Robinhood. So as you can see, we have the 100 shares of this stock, so we're going to click on it. Now this is Sundial Growers and it's around 82 cents per share. So the couple things that I want to go over is that my market value currently is $82.40. My total return in today's return is -6%, which is down $5. I did buy this yesterday because I made the video of how to do a cash secured put at 50 cents. I didn't think it would make it, so I went ahead and just bought 100 shares of this. Again, this is just an example account, so it's kind of just me doing small buys here and there just to teach you guys. But as you can see, I bought this at $87. Now it's currently sitting at 82, so we're down 6%. We do own 100 shares of this, and our average cost, again, is 87 cents. So since we have all of that, what we're going to want to do is come down to trade SNDL options. Once we do that, the option chain is going to be brought up for us, and then we're going to want to start clicking around to get to where we want to go. So since we're doing covered calls, we're going to be selling calls. So make sure you have those 2 lit up so that way you are clicking on the right thing. Now, the next thing you're going to want to do is click an expiration date. Typically, the farther out you are, the better. The reason for this is there's a lot of factors, but the more time that the actual options contract has to reach a certain price, the better it is. And also on top of that, there's a thing called theta decay, which within 30 days, that's when it ramps up. So if you're outside of that 30-day expiration date, that's a lot better for you and your premium that you're trying to collect. And I'll even show you an example. So we're saying that this is going to expire on the 30th, which is the nearest option contract, which is just around a week out. Now, if we take that and we go a little over a month out to August 27th, you can see that the covered call does increase to 8 cents and 4 cents. And if we go back, we can see that it drops to 2 and 1 cent. So for us, it's going to be better the farther out we go. And let's just pick something around like September 3rd. Now you can see the closest at the money strike or even out of the money strike is $1 because currently it's sitting at 82 cents. So if we click on $1 and we click plus, that means we are going to collect a premium of 10 cents per share. So let me go into a little more example on this. So the strike is the share price that you're agreeing to sell your 100 shares at. So remember, we bought this at 87 cents. So if Sundial Growers goes to $1, I then am forced to sell, or if I'm assigned, I need to sell my 100 shares at $1, which for me, I'm completely okay with because this was just kind of to do an example. I don't really want to own sundial growers. But the cool thing about this is that, as you can see, the premium right here, this is what I'm going to get paid. So as you can see, I'm getting $10 for selling a call on this. On top of that, if I do get assigned, I'm selling 100 shares at $1, which means I'm going to make a profit of $100 plus the premium of $10. So I'm making $110 if I get assigned. And on top of that, my average cost was only $87. So I'll actually be profiting well over $20, which is over 20% on this trade, which is really good for me. Now that we've actually picked our certain strike price, I do want to look into a couple other things. So now a couple other really important things to look at is the bid-ask spread. This is the spread that you're going to be paying in order to get your contract filled. The higher the spread, the farther out it is, the more you're going to be paying to get in and out of this trade. This is also determined by volume, open interest, and implied volatility. Open interest for this contract, as you can see, is 0, which means there's no open contracts for this covered call at this price, at this strike price. So I'm the only one. So typically bid ask spread will be a lot wider. Now if you were to go to a stock like Tesla and you were to write a covered call in there, there's going to be a lot more open interest and a lot more volume because it's a more popular stock, more people are trading it, and there's just more volume there. And then implied volatility is something that tells us how volatile or how much this stock can actually move. And then we have the Greeks down here, which we'll actually make videos on in the future for you guys. So once we've done all that, we've collected our strike, we've looked at all of our stuff, looked at our chance of profit, everything like that. We're going to click continue, and then we're going to review everything. So we're selling one contract, the limit price at 10 cents, and it's good until it's canceled. Now, the minimum credit, when it's a credit, you're getting money. When it's debit, you're giving money. I'm going to be getting $10 for selling this call. And if we review order, it's going to tell us your collateral is 100 shares of sundial growers and you are getting $10. And it'll even tell you right here that you're agreeing to sell 100 shares of sundial growers at $1 before or on September 3rd. If it doesn't reach that price, you're going to keep your $10 and your 100 shares. So we're going to go to submit. And once this is all done, it's going to be sundial grower short call queued, which means we're not there yet. It needs to be filled, which we are pre-market, so it's not going to happen on this video. But once the market opens, hopefully it can get filled. And once it's filled, I'm going to collect my $10. And then I have until September 3rd for sundial to reach basically the strike price of $1. When it does hit $1 or above, I'm going to have to sell. Even if it goes at $2, I'm going to have to sell at $1. But I'm okay with selling at that price because for me, I don't really care about owning this stock. But on top of that, it's going to be a pretty nice profit in that small account. So once you click done, you can then come back to your account. And then once the market actually opens, you'll actually be able to see that I have a contract queued up and it'll say options and short call on these 100 shares. And then you just kind of wait. You just monitor your trade and just wait. And then as far as the premium, the $10 you collected, you can then go out and use that money for anything else, buying fractional shares, buying super out of the money calls. Don't do that last part. But literally, it's money that you can do whatever you want with. So if you guys enjoyed this video, if you found anything useful in it, I would highly appreciate you guys subscribing to the channel. It really does help out a lot. Also comment down below if you found anything valuable, and also make sure to join our free Discord. I mean, we've already got a couple members and it's going to just continue to grow and grow and grow, and we post it every single day about stuff for you with just resources and everything that you need to know to become a better, more knowledgeable, more profitable options trader in the stock market. All right, well, that's it, and I'll see you guys in the next video. Peace.